Jack Lowenstein, the Co-Chief Investment Officer at Morphic Asset Management, joins me now live from our Sydney CBD studio. Jack, thanks very much for joining us. Now, given that Mr Trump has been seen as sort of predictably unpredictable, the very fiery rhetoric that we got used to hearing from him earlier last year, that seemed to really have gone.
Well, perhaps he's a bit happy. It has actually managed to get some things through, particularly the tax cuts, which I think will be looked upon as, in the end, as having been quite a good move.
Yeah.
So that's a big win.
All right, so let's take a step back a bit from that. He did talk about, that trade is very important, and he said he will negotiate trade deals, but they have to be fair for the United States, obviously. Now, his recent speeches at Davos seem to hint that, he now wants to perhaps move back into maybe the TPP. He was even talking about, because he likes Emmanuel Macron so much, that he might go back into the Paris Climate Agreement. Do you see this as a change in his rhetoric, even though the trade sanctions announced last week against washing machines and what have you really are aimed at China and Korea?
Look, I think that in the end, America has to cannot fight with everybody at the same time, and the only really existential threat to America as an economic power or as a military power is China, and so my guess is that Trump has realised he can't fight everybody. Therefore, it's time to perhaps back off a bit on some of the NAFTA, and that's the North American Free Trade Agreement renegotiation, and focus on China as the major target for rebalancing. It's the one that makes the most impact on America. Yeah,
and yet it's interesting because he wasn't as fiery in his rhetoric today. He did mention what you just said about China being, a rival to the US in terms of power and economically, but none of that they were a currency manipulator and all that sort of talk that we did hear about, I guess, really before the inauguration. But so do you think there is a possibility that we will see more tough talk on trade apart from the State of the Union?
I think there probably is, to be honest. I really think that one of the things that makes Trump an effective negotiator is that he is, he's unpredictable. Just when you think you've done a deal, he'll move the line. So I think that is going to be an ongoing trend. But I think making an enemy of Mexico in particular is not smart. You want to have healthy neighbours.
All right, let's move to the other side of the Pacific. Now, I know you're watching and you're a keen investor in Japan, but you are watching Asian banks. Why do you like them, and which ones?
Well, look, I think that our view is we've been very, very cautious about Chinese banks for a long time, as have most Western investors. But our view now, and we're not yet in the trade, but we're looking at it very closely, is that because global growth is picking up, and the outlook is getting a bit better, and because Chinese banks in particular have been through a massive cleansing process and Indian banks are currently going through one, we don't think that cleansing process and a pickup in growth has yet been fully factored into share prices. That's true of Korea as well, by the way.
All right, so which banks? Are you talking sort of just generally banks in China, India and Korea?
I think those are the most interesting. I think that we've been a bit sceptical about ASEAN as a place to invest because it's small and fussy and the trends aren't as strong there, whereas those other markets that I described are more attractive because they're bigger and we think there's more pronounced trends. So in Korea, for example, I mean, there's always things to worry about. When investing, you live in a constant balance between fear and greed. In Korea, everybody's worried about government regulation and so on, but we don't think it can quite destroy the story. In China, people are worried about the satellite financing, the shadow banking industry. But again, we don't think it's big enough to really destroy the story. Yeah. And in India, the story, it's all about really whether all the recoveries are priced in or whether there's still growth. And in each case, we feel, on balance, it's probably still time to be greedy rather than fearful.
All right, let's move to Australian reporting season. I mean, I know you more often look overseas, but how are you seeing that? I mean, certainly equities really hasn't moved that much in terms of a market, but how are you seeing this as we come into reporting season?
Well, we are seeing a few little pockets of interest. So we've recently bought JB Hi-Fi because we think that the Amazon fear factor has been way overstated, and JB Hi-Fi is a very well-run business in a sector where we hear sales have been very strong. So we have bought a little bit of that.
On that basis, Jack, do you think they can actually withstand perhaps the slow burn that will inevitably be Amazon?
Look, I think that the lesson from America, and we think we're at least 5 years behind America, by the way, in this trend, the lesson from America is that the very strong specialist retailers survive and thrive.
Right.
So in America, there's a JB Hi-Fi lookalike called Best Buy. There was a JB Hi-Fi minus, if you like, called Circuit City. Circuit City went bust, and Best Buy thrived as the last, large high street retailer of electrical goods. So we see JB Hi-Fi very much in that light.
All right, Jack Lowenstein from Morphic Asset Management. Great to talk to you, Jack. Thanks for joining us.
Great to be here.